content of this podcast is produced for entertainment purposes only and is for informational and educational use. It does not constitute financial or investment advice. You should not make any financial decisions based on the information provided without consulting a qualified professional. All opinions expressed are solely those of the host and guest and do not reflect the views of any company or organization. The hosts and/or guests may currently own, have previously owned, or intend to own securities discussed in the content. The content produced here belongs to Daniel Andreev of 18 Degree Journal and cannot be reproduced or used without prior permission. We do not wish for this content to be used for AI training and do not give such permissions. WriteUp. AlphaPolis Co. Ltd. Tokyo Stock Exchange, ticker 9467. A hidden high-quality compounder hidden in plain sight. Hello, dear reader. As the old saying goes, as my publications grow, so does the length of my apologies. I'll just come right out and say it. Moving forward, I'll be adopting a more slowly but surely pace of publishing. I won't stress too much if some pieces end up living in my drafts for a while, or perhaps even forever. I'll simply publish them as I see fit, without worrying about a strict timeline. You may have already also noticed the slower pace, and to be honest, I feel a little more comfortable working this way. On a lighter note, I want to share that my trip last month concluded wonderfully and successfully. I left with 0 complaints and a lifetime of incredible memories. Also, for those following along, the A to Z platform I introduced a month back is making good headway and is set to roll out sometime in August, September. So keep an eye out, and I will open the waitlist later today at www.volos.net. The rest of the platform will slowly be rolled out as the waitlist grows in users, and I think our small time goal is about 50 users on the waitlist before we start actually rolling out the features publicly. If you do click in the next little while, expect it to be changing constantly as we're still finalizing a few things, auditing the information, and making sure that this first stage and the first part of the platform is exactly as we envisioned from the user's experience standpoint. Again, today's piece, just like last time, was found as part of the auditing of this platform. I've been digging through what we call defective data artifacts or anomalies to make sure our platform is accurate. Well, last time we had the very interesting idea in Sarman, and this time we have what I call a high-quality overlooked company. Honestly, I still can't believe it isn't a widely known household name yet, so today the piece is dedicated entirely to it. Finally, as part of a change of pace and inspired by a few recent speeches I've been listening to, I'm going to keep this one short and sweet. If you'd like to dive deeper details, please don't hesitate to reach out. I can always expand much further with a lot more boring detail. So, short and sweet, let's give it a try. The nice and short pitch. So, a few years ago, I was fortunate enough to read What I Learned About Investing from Darwin by Pulak Prasad. It fundamentally changed how I think about investing, particularly what it means to own a truly high quality business and what makes them up, and the underlying goal of building a portfolio around them. Ever since then, I've been searching for what I call a Darwin stock. While I've continued to invest in more traditional value opportunities, such as the recent write-up in Sarman, my real goal has always been to find these rare businesses hidden in plain sight that possess exceptional economics, durable competitive advantages, and the ability to compound for decades. I genuinely believe I found one, and let me introduce AlphaPolis Co. Ltd., Tokyo Stock Exchange, ticker 9467, a Japanese media company that has quietly built one of the most fascinating network effect businesses I've come across. Over the past 2 decades, we've watched platforms after platform democratize creativity. We had YouTube, Instagram, TikTok, enabling filmmakers, directors, photographers, entertainers to find audiences. However, those platforms missed the opportunity to exploit the talents that excel in storytelling through writing. AlphaPolis built to exploit that opportunity. At its core, it operates one of Japan's largest web fanfiction and indie writing publishing platforms, allowing aspiring writers to publish their work to millions of readers. The open secret of the platform is that it's not only a great place for writers to find their audiences, but also a chance for writers to earn cash, make a name for themselves, and have a chance to sign an exclusive publishing deal, should their work become popular, to turn their writing into a light novel, a manga, or even an anime series. AlphaPolis hosts this huge platform not just as a goodwill gesture, but as a way to let the market lead them to the next winner they should invest in, meaning using web traffic data to lead investment decisions. Not only that they have a steadily expanded to have in-house editors, publishers, and even an anime studio to reap the rewards to the whole value chain. In effect, the company has built an incredibly asset-light business model that discovers intellectual property at almost no cost, valuing it using millions of readers, and the compounds returns by monetizing the same story across multiple platforms. Now, I have a diagram in the actual write-up that you can check out, and I didn't go fully into detail as I did mention in the introduction and now, but there's fascinating parts about the vertical integration of this platform that actually gives them huge advantages. Traditionally, for example, a lot of animation studios in Japan are not super profitable because they get paid for their work, and their success depends strongly on the success of the actual production, making sure TV and getting the royalties, and the company staying in business. Here, just because they own the whole, let's call it the whole vertical ecosystem, they are actually milking it every step of the way, and the operational leverage they have over the whole process gives them quite the nice economics. Anyway, again, I promised to keep it short, so I'll kind of skip it ahead, but do glance quickly at the chart, and reach out if you have more questions. I do have a lot more to share. On the numbers front, though, it's very hard to undersell this business. The gross margins sit at a staggering 74.4%, driven by their higher margin digital manga app. Net margins are currently around 13.9%, which have dipped recently due to temporary integrations costs of acquiring their anime studios, White Fox and Nia Animations, and a few delayed show airings. But this is a short-term friction for a full vertical integration platform now. The business delivers a return of invested capital of over 15%, operates with virtually no debt, and holds about 12 billion yen in cash against about a 30 billion yen market cap. That means that about 40% of the market cap is sitting in cold, hard cash. If you strip out the cash, the underlying business has an enterprise value of around 18 billion, and that's about 150 million at today's exchange rates in USD, against about a 1.94 billion in free cash flow, and you're paying an enterprise to free cash flow about a multiple of 9.4 and 5.1 of EV divided by EBITDA for an operating engine that just grew revenue at 22% year on year in 2026. The current price, with a 10% working cost of capital, or WACC, and a 2% terminal value, implies that the free cash flow growth market's pricing it at 3.2% per year over the next 5 years, even though the return on capital has been comfortably over 10% over the last 5 years. Even if I quickly build a DCF averaging over the last 5 years of free cash flow, call it 1.5 billion, having a terminal value growth rate of 2% and a strict discount rate of 10%, I get an estimated enterprise value of 17.57 billion, literally around today's price. At the current price of about 1,000 yen, the market is essentially pricing this company as if it has grown prematurely flat into its historical cash flow average, completely ignoring the fact that top line revenue just grew to 22% year on year, digital manga is scaling globally, and 40% of their market cap is sitting in liquid net cash. Last words. I believe once you see the graph of the business or understand the high scale advantages of the business model, it doesn't take much to wrap your head around the business. Therefore, I don't see the need to break down every single detail about the business. Those interested can have they do have a great website. Materials available in English, and you can gain some incredible insight there. Management is also quite good at communicators, so it's worth your time. Of course, just like in any idea, there are risks to keep in mind. For example, the yen currency volatility. Other competitors such as Never in Korea, who bought Canadian Wattpad, who could exploit a similar playbook, although I have strong conviction that if it does happen, it actually helps grow the overall addressable market, not create more competition. And the risks of compounding now costs on failed projects, because now they have an anime studio, so if it goes wrong, it's a little more expensive, or overstated of bad content platform. Anyway, it's a rare opportunity to invest in a rare public anime media business, what I believe is in a very compelling valuation. Manga anime have rapidly exploded popularity in recent years, and global demand seems to still be growing. Anyway, if you're interested in a bigger write-up with full history, business use case examples for the valuation, let me know. I hope you have enjoyed. It's been nice. Daniel.